some outcomes are guaranteed, but most are not. Yeah, we don't know what's going to happen in the future, but we do have about 96 years worth of data that tell us basically how it's worked in the past, which gives us a good forward-looking view.
What you don't know is costing you commas and zeros. Welcome to the Owner's Profit Playbook. I'm Pat Mancuso. Most entrepreneurs think their biggest challenge is growing revenue, but the real problem is the profit leaks hiding inside their business. On this show, we break down the strategies, structures, and financial blind spots that separate struggling operators from truly profitable businesses. Because building a business is one thing, but building a business that creates wealth, that's the real playbook.
Welcome, and my name is Pat Mancuso. I am the host of the Owner's Profit Playbook, and I'm very excited today to welcome a gentleman who is going to help you and help us and all of our listeners understanding how to build more wealth, understanding where there may be gaps in that wealth, and some opportunities really that are exciting to us and the folks that we deal with on a daily basis, small to medium-sized business owners and high W-2 wealth earners. So most business owners don't actually have a money problem. They have a certainty problem. They've made money, they've built companies, they taken risks. Most people won't. But when it comes to the future, especially retirement, there's a quiet fear that most won't say out loud. What if I run out of money? Not what if the market dips, not what if taxes go up. What if I outlive my money? Today, we're going to be talking about a strategy that may get some attention. We talk about it internally a lot, but people have a lot of opinions on everything around wealth building. And Kirk, I'm sure you would agree with that.
For
And
sure.
there's generally not enough clear explanation. And so today we're going to talk about the Flex method. And my guest today is Kirk Stafford. We're going to have him talk a little bit about his background in just a second. But our goal on the Owner's Profit Playbook is to not pitch. This isn't about a pitch. This is really about creating a dialogue around information that you may or may not know, you may or may have heard in the past, but it's really to explain clearly and honestly without any hype. My goal is to help business owners with what they don't know is costing them commas and zeros, and that's why we're here today. So before we jump in, Kirk, first, thanks for being here today.
Oh, thank you for having me. It's good to be here.
So give us the 2-minute flyover, if you may, of Kirk and a little bit of your background and what's brought you to this really amazing strategy around the Flex method.
Well, actually, I grew up actually very poor. I had a mother that raised 6 kids on her own, and somewhere in there, I don't know if that's maybe why, but I had the seed planted from one of my grandfathers on how investing can actually have your money work for you. And that always stuck with me. It's been in my blood since I was about 14. And so I've always just loved everything with the number, real estate, stocks, business, how to save on taxes, economics, anything in that realm has always been really interesting to me. And so I got started, like most, with, just trying to figure out how to pay the bills. And, I got married fairly young. I was about 21 when I got married. And fortunately, that was exactly the right thing for me and exactly the right person. And that's blessed my life, of course, tremendously. But we got started, just trying to figure out how to budget and how to, make sure we can make it to the end of the month, kind of a scenario. I got started in business. It's been about 30 years now that I've been a business owner. Actually was able to retire in my early 30s. I was about 32, did that for a few years. And then realized, what, it's not good to hang up your cleats when you're that young. It's fun
Right.
to be useful and do something good in the world. And so I thought, what, I love exchange traded options and derivatives and currencies and stocks and real estate and all that kind of stuff. I felt like I knew how to make money. And so I thought I'll just go out and and help others, figure out how to make more in their life. And I know I would have loved to have had somebody just take me by the hand and show me how to do all that. I assumed everybody would love such a thing, and had no idea that how tough the industry actually is, and
Right.
how tough it is to talk to people. It's amazing. We talk to some very, very smart people, and they're in each of their fields, doctors and engineers and you name it. And you'd be surprised at how many are very new to investing, don't know or understand a whole lot about how money works. And they're really smart, great people in their field. It's just something they're just not as familiar with. And so sometimes people get intimidated. Sometimes they are just embarrassed, maybe to that they don't know a whole lot, and so oftentimes they kind of wing it. And
Right.
so anyway, we're out there to change that. We've discovered some things that are very, very powerful, and it's funny. I look back and I just think there's such a I've had such a diverse background in investing, in business, with taxes, that all of those things have just kind of come together. And so, anyway, I'm just really fortunate to be in a position where we are. We've got about 92 employees, I believe. We're one of the biggest companies in the country when it comes to selling life insurance and doing investments. And we have a lending company. Anyway, I'm sure we'll get into all of that over the course of our discussion today. But I think all of those backgrounds have put me into a unique position to find some kind of some nuances that are just awesome, especially for business owners.
Well, Kirk, you said a couple things. First, I want to go back to retiring in your mid 30s. Congratulations. And yet, I know you've probably seen the numbers. 70+% of people who, business owners specifically, who retire, no matter what age they retire when they're a business owner, they very quickly realize they weren't ready in many cases. So that it's kind of interesting that, you experienced
Oh
that as
yeah.
well. The other thing that I love that you brought up, and we're going to jump into the flex method here in just a second, is you described an environment where, number one, it's not just a product. You're not delivering a product. You're delivering a strategy, and that strategy is not in a silo, because you mentioned a couple of services that you also offer in conjunction with this. And I think that's the most important thing that I've learned in this journey that we've been on as part of the service offerings we have for small to medium-sized business owners and high W2 earners, is that that's the problem, is a lot of people get information in silos, and those silos don't help them in terms of maximizing their returns on their investment and minimizing tax and all those things. So let's start with clarity. When people hear flex method, they might have no clue what it is. They might have a definition that has nothing to do with anything relative to what we're going to talk about, and they may assume it's a product. So before we go any further, give me the quick, what is the flex method? I know it's not going to be quick because we're going to talk about it the rest of the conversation, but if somebody says to you, hey, Kurt, what is the flex method?
Yeah, it's really it's a way to take a product, life insurance, which is frankly one of the most boring, mundane, steady type of products on the planet. But in that, there's actually some characteristics that allow us to use it in ways that you wouldn't really normally think would be applicable. And it's taking experts from the tax side of things, from the investment securities world, from the insurance world, from the lending world, estate planning world, a business planning world, bringing these experts together.
Right.
And it's not a special product. There's nothing special about the insurance piece itself, other than we use good carriers and build them correctly. But it's those incremental improvements that each of those experts bring to the table that can then take something that's normally, a nice product. It's a good product, but it's nothing terribly special. But how it gets applied and used takes it to a whole new level, and, can both produce a ton of income and growth for your business with money that normally is just sitting idle. It's not even
Right.
money you have to, take out of your operations and stop growing your business in order to do something. No, it's money you already have laying there that you don't realize could just be repositioned. And so
Right.
all of that creates a lot of value. How it helps retain employees. There's a whole bunch of different applications for it that I'm sure we'll get into. So.
Well, you know what's interesting, Kirk, is that if there was one blind spot in my life, up till about 7, 8 years ago, it was life insurance. Now, did I have life insurance? Yes. But it was life insurance for the purposes of if I died suddenly in my, 30s or 40s, that my family would be taken care of. And yet, the silliness of that is that the amount of insurance that we had at that time would not nearly take care of my family and the future. And yet the thing that I've learned, through your knowledge and experience and presentations and all the pieces that I've learned in addition to that, is life insurance is really a tool to build wealth as you are moving towards maybe that exit from your business or exit from the earth, if you may. I mean, I know that sounds kind of crazy and some people freak out about it, but the fact is we're all going to die at some point. And so let's shift gears a little bit, if you may, and let's talk about retirement for business owners. Most traditional retirement planning assumes, we're going to get finances at the end. There's a clear stop date, but business owners don't live like that. Income is uneven, taxes are unpredictable, and many owners don't even want to retire, as you mentioned earlier. So from what you see in terms of business owners, what scares them the most about retirement?
Well, I think you nailed it. Sometimes they're so busy building their business and working in their business that they don't set, money aside for the future. So that's very oftentimes an issue. Life has a way of throwing some sucker punches,
Yeah.
and that happens a lot of times as well. You're going along, things are doing well, and all your eggs, so to speak, are in that one basket of your business. And if it gets a big sucker punch at the wrong time, divorce, there's just all kinds of things that life can throw you with health issues that sometimes that can just pull the rug right out from underneath you. And so, having a little diversification, all of that is important. What is, I think, different about what we do versus a typical investment advisor or insurance agent coming to you saying, hey, let's have you put some money into these things and these vehicles. I think one of the things that's a little different about the Flex method is we like to go in there and say, hey, what are you doing now? What are you, how do you run your business? How do you run your real estate? How do you run your investments? And how can we take what you're already doing and just add to it without taking from it? So it's not an either or. It's
Right.
being able to take what you're already doing, apply the principles that we use, and just layer on extra value without it interrupting for instance, your business operations, your real estate, your stocks, and all of that. And so that's kind of what's it's just different. It's just very different than a normal um, insurance sale or 401k sale, something along those lines.
It makes sense. I mean, what I see, Kirk, is I see, people fear dying broke. They fear living broke. They fear losing control, fear being forced to change their lifestyle. And that's not really what this is about, right? And sometimes they fear becoming dependent on markets and distributions of things they can't control. And I know as we jump into this, we're going to get into that process, if you may. So as we talk about the Flex method, as a backdrop, people are living longer. Obviously, markets are more volatile right now. There is a risk in everything, including retirement, depending upon where you have your money. And yet, what I've learned from you already is that the flex method is a way to not eliminate risk, because you can't truly eliminate risk, correct?
Well, I mean, there's risk in anything, including a
Right.
U.S. Treasury. But yeah, exactly. Extremely low risk. I would
Right.
put it at the very low end of the risk scale. Let's put it that way.
So, how does the flex method position itself, if you may, as a strategy against the fear of running out of money? How would you respond to that?
Well, I think as you understand, okay, so let me back up just a little bit. So I come from kind of the far right of the investment world. My passion actually and my expertise is actually in exchange traded options and derivatives. So when I came out of retirement, I had a friend that worked for an insurance company, and I didn't want to go to some firm where you got to smile and dial or pitch the stock of the day or something like that. I knew what works, and I wasn't going to have some company telling me what I had to sell and that kind of stuff. I
Sure.
wasn't in a position where I needed to do that. So anyway, I had a friend that was at an insurance company. He's like, "Hey, come to work for us. We'll let you do what you want to do," which wasn't exactly true. I don't think he knew the difference, frankly. But at any rate, I didn't know the difference because I knew investing, but I didn't really know the financial planning world, or I never would have gone there. To me, insurance was like a glorified savings account. I'm like, well, I can make so much more money doing other things. Why would I bother? But I'm so glad that happened. I ended up going there, ended up learning about where it can be used. There were a bunch of things that I wasn't aware of as far as estate planning and using it as a bond substitute. There's a bunch of things that are done in the industry that are it's good. It's a good tool to have in your toolbox. Let's put it that way.
Right.
And like everything that I do, when it comes to numbers, I really dig in and try and understand the ins and outs and the nuances and how to optimize something, where it should be used, where it shouldn't be used, all of those things. And I ended up finding out that um, there you remember you remember the commercials from way back when where you've got somebody walking with their chocolate and then the girl's walking with her peanut butter and they come around the corner and they bump together and they all of a sudden discover Reese's peanut butter cups or something like that. You remember that commercial? And it's kind of like that. I have this background where these pieces would never normally come together. And yet my background in these different financial arenas kind of came together with insurance. And throughout that's what or through that process is where the insurance uh, piece really came into be looked at not as just a normal insurance piece, but as a tool for growing your wealth in a way that hadn't been done before. And so, what most people don't realize, those that are familiar or somewhat familiar with insurance, they look at it as, wow, this is a really safe thing from insurance carriers that are double A, triple A type insurance carriers. Super, super solid guarantees. Many of them have it just all kinds of features that make them one of the safest, most consistent products on the planet.
Right.
It's been around for 180 plus years. These companies don't go away. Banks come and go, but through
Yes.
Great Depressions, World Wars, you name it, all kinds of environments, these insurance carriers continue to march ahead and provide all those guarantees that they promised their policyholders. So, but they don't realize that they always look at it as kind of, well, if I do that, then that's going to prevent me from doing these other things. And yes, it's a good, solid, steady, tortoise, if you will, example of what's going on. But man, I need to make more, and
Right.
so they don't realize that actually with that product as the base, we can actually get returns, and position our uh, everything else where our overall value is something very compelling. Typically, oftentimes, in fact, especially for business owners, even in the 13 to 17, 18% tax-free range.
Wow.
Well, that's extremely compelling. And, over time, with the magic of compounding, that is a big, big number. And so being able to do that inside of I should say, together with the vehicle of life insurance,
Right.
it's just not something that's normally available. So we're very fortunate to be able to roll this out. It's one of the reasons why we've just grown like wildfire, has just taken off across the country, because of the fact that, one, it's built on the foundation of this, tortoise, slow moving, predictable asset, and yet we can kind of unlock it and have it become something that's much more compelling from a growth and income standpoint. So,
Absolutely. Well, and I know you know this. People don't fail retirement because the math was wrong. Generally, they fail because they made bad decisions, if you may, along the way. So, how does having accessible, predictable capital change behavior in retirement? Would you say?
well, from a psychological standpoint, when you've got money coming and you've got money available, you're not going to wake up and because something happened, somewhere across the world, or Congress does one thing or another, all of a sudden everything's worth half of what you thought it was worth the day before. That kind of predictability provides some peace of mind, that allows you to just live your life and enjoy life and enjoy what you've built without having to wonder, is next month when it's going to happen, and everything's going to change. You just don't have that anxiety. And then with that base, you've got the ability to actually even be a little more aggressive with some of your other investments and real estate and your business and things like that, because you've got it covered.
Right.
You're not risking it all on red 34 and spinning the wheel. You know what I mean?
Absolutely.
So I think one of the things that's really important to know too is, when you can take something. One of the things I like about the corporate flex, for instance, or even on a personal basis, everyone's got to have buckets of money, so to speak. You I don't care how aggressive you are, you can't have 100% of your money in high growth, illiquid type assets, and just always living on the edge of being broke. You just can't do that. And so, in order to stay in business, in order to not go broke personally, everyone has to have an emergency fund. Everyone has to have at least part of their portfolio in something that's conservative and accessible, right?
Right.
Almost, I don't think I'm familiar with any business owner that has perfectly steady cash flow, right? It's always lumpy. You complete a project, you get paid, and then you don't get paid for a while, and so you got to be able to pay your payroll, or those employees for some reason don't want to come back to work for you if you're not paying them. and
Right.
and and you got to keep the lights on through thick and thin. And so, uh, you know, you got to set some money aside. Well, where do you put that money? Everyone we talk to does the same thing everybody else does, which is they just put it in a checking account, right? Well, why? Well, they put it there because it's got to be safe and it's got to be available. They can't put it into, let's say, real estate, because it won't be available when they need it. They can't put it into stocks because when they need it, they can't afford to have it down 30% and then pull it out. That's a bad
Sure.
strategy. And so they just put it in a checking account. Well, how much does that pay? Nothing,
Nothing.
Maybe every once in a while we'll run into some people where they keep it in money markets or CDs or something like that. But it's usually just sitting in a checking account earning nothing.
Right.
Well, if I can use it, so going back to that safe chassis of the life insurance, if we can build a strategy where we keep the money just as safe and just as accessible, it's not going to be FDIC insured accessible, but on a scale of one to 100, instead of a 0, it's a 1, you know, but now we can actually make a lot of money and get a bunch of benefits for both the business owners and the employees at the same time. Now we've got something where the money's safe, it's accessible as soon as I need it, but now it's not asleep sitting there. We don't have to take from operations. We don't have to tell you to stop expanding your business or doing your real estate or all of the other things you're going to do with your money. But the money that's just sitting asleep in that checking account, why don't we move it from your left pocket to your right pocket, keep it just accessible,
Right.
and now really make some money with it in a safe manner? That's where all that extra money comes into play. And when you understand the power of compounding, just that one little act of shifting from my left pocket to my right pocket creates thousands and thousands of dollars, millions of dollars, depending on obviously how much is going into it. It's just got a huge repercussions down the road with something that you like. Most people would be like, why are we even talking about where I park my money? Like that's so boring, you know? That's such a little thing, and yet it has such a big effect down the road over time.
Well, and I think you hit something on the head, particularly for business owners, and yet I think high W-2 income wage earners, the same thing is that they're not looking at that destination. They're not looking, I have this conversation with a lot of business owners, and I say, so have you thought about an exit, right? At some point, you're going to likely exit the business. And many of them, as you know, have not thought about it specifically. And it's kind of like getting into a car and going someplace, driving someplace that you've never been before. If you don't know that address, that specific address, it's really hard without a GPS to get there and get there in an efficient way and get there in the time that you want to. And with the number of baby boomers exiting their businesses, it's just such an opportunity. And yet I think many people are not prepared for that. And so they get surprises, right? Because again, if you don't plan, it's a surprise. Let's talk, Kirk, from mechanics at a high level. Somebody who's listening and is curious, but maybe skeptical, like, when they hear, life insurance, leverage, borrowing, the things that we're going to talk about, just walk through at a high level what's actually happening inside the Flex method.
Okay, great. So from a high level, it's always best to be able to show examples and visuals and those types of things to really get and understand what's going on. But basically, you have this vehicle that if you build it correctly, go with the right carriers, as you put money into it, you're going to have oftentimes, especially with business owners, we can actually have them start making money immediately. So even in the very first year, depending on how it's built, and keep that money accessible and available to you. So life insurance, it takes a while to get it off the ground. And so it's not a short-term vehicle. It's not something, there's costs and expenses and commissions and all that kind of stuff up front. Over the long haul, it's actually quite low. The fees are actually quite low if you build it and fund it correctly, compared to other types of investments and vehicles. But up front, there's actually a lot of headwinds, a lot of costs and expenses. And so one of the things that we do is we make sure that those expenses are kept to a minimum, that we put it into something that's making money for them immediately. And then there's really not a reason not to do it, because you're not making any money anyway in a checking account. And so if we keep it safe and accessible and we can get it started and going, once it gets, gathers momentum, that's when it really starts kicking off some great returns. And so initially what we do is we look at the business and just take a step back and talk to them about what it is that they've got going. Like, what's important to you in your life? How does your business look? When do you need cash flows? There's everybody's a little bit different. It's surprising how
Right.
similar businesses are, but at the same time, it's different. Sometimes you'll get businesses that are owned by one person. Sometimes it's several business owners. And so how we layer in what's most important to them, their cash flow needs, that's what we do to make sure that it's a plan that's appropriate for them and it's going to just fit right into what they're already doing. There are a lot of moving parts. In fact, I always say there's four weaknesses to the strategy. One, you got to be able to qualify for the insurance, or you
Sure.
have to have somebody that does qualify for it. So you can be 80 years old and not in great health if you're a business owner, and you can have insurance that's owned by the company that's on, some young 20-year-old that's employed by you. There's ways to do that, get around that, but that's one of the issues. You got to be able to qualify for it. Two, it's not a light switch. And so you don't just flip it on and all of a sudden you're making, that 14% tax free. It's going to take a little bit to average that and to ramp up to that. But that's okay. Time's going to march on, whether you do it today or do it 20 years from now, you might as well get it going today. Right.
Right.
So that's one of the weaknesses. One of the other weaknesses, there's actually a limitation to how much you can put into it. And it's based on your age and health and your net worth and your income. One of the things that I like about the corporate flex method, which is, where we apply it to businesses, is it does actually open the bottleneck, if you will, to be able to deploy more capital in it. It can literally be a business inside of a business. And then fourth, and that kind of touches on what you were talking about earlier, there's some complexity to it.
Sure.
And so just like anything else, you don't have to know how all of that works, but you do have to know enough about it to where you're comfortable and you realize, hey, these guys know what they're doing. There's nothing here that's going to hurt us.
Right.
And it's actually going to be a really good strategy, but I'm going to let them do it. They're the nerds, right? They're
Right.
the ones that know this stuff. I don't want to have to deal with this. As a business owner, these guys wake up thinking about their business from the time they wake up to the time they go to sleep. And they're really good at whatever it is that they do. I don't know their business. I know a lot about it, but I'm not the experts at whatever field that they're in, but I know this piece of it really, really well. We take care of this piece of it. They can just move on and continue with everything else that they do. They don't have to know everything about it.
Right.
And so typically what we find is the most successful strategy is for whoever's going to do the evaluation to just make sure that they're comfortable with what it is that we're doing. Have them take a look at it, give them, our stamp of approval on what we're doing, and then turn us over to the, somebody that is a good administrator and can think about it. Because we don't want the business owner to have to, make a lot of these, day-to-day decisions on how it works and gets implemented. It's just like your health insurance or anything else. You got to decide what you're going to do and how you're going to do it. But after that, you give it to your HR, you give it to your, admin people, and then we work with them and take care of it from then on out.
So let me ask you this. I want to draw a line, and it's probably not going to be absolutely a clean line, but who should absolutely not be considering something like this? And then we'll flip it upside down and once you're done with that. So who shouldn't look at considering something like this? Do you have any thoughts on that?
Yeah, no, that's a great question. So I would say it's anybody that doesn't have the time horizon. Like this is not something where you're gonna put $1 in today and then pull it out 6 months from now. That wouldn't be a good strategy. At least not all of it. I mean, you can have access to the dollar,
Sure.
but you wouldn't want to start it and stop it. That's not a very good strategy with anything, obviously. So that's probably the biggest one. Anybody that's, if you're on the edge of bankruptcy or trying to figure out how to meet payroll still, it's something good to know about, but you probably don't want to implement it, if that were the case. I would say, trying to think of who else would not be a good candidate.
Well, let's flip it
Um,
and go, who would be
yeah.
a good candidate?
That's what's kind of crazy. We pretty much most people. I mean, if you're an individual, one of the first things you need to be doing as an individual to get your finances on solid ground is to have an emergency fund and set aside some money for contingencies and making sure you know aren't reliant on credit cards or something like that, right?
Right.
Well, where are you going to park that money? Why don't you park it inside of an insurance policy that is not only accessible and available to you, but it's going to protect your family and it's going to grow way faster than any sort of checking account's going to do, right?
Right.
It doesn't have to be sitting dormant. You know, you can get that money working for you and doing multiple things instead of just sitting there. So that's just to get started. But it's the same thing with business owners. It's a great place to start or to park that conservative piece that doesn't have to interrupt all of the other things that you're doing. We have a lot of people that look at it as a business inside of a business and actually take, you know, a lot of their expansion money and they'll actually put it into it because of the things that it does for them. But even if you're just getting started, it works with that. On the other extreme, you've got people that have built a lot of wealth over the years, and one of their issues is taxes, and they
Right.
know that the tax man's coming for them, and that money, everything that they built up and paid taxes on over the years, is now surprise going to be confiscated again, unless they do some planning and looking
Right.
ahead to the future. And so the strategy can actually be really good for that as well, to make sure that on the other end of the spectrum we can enhance what they're doing with their real estate and their stocks and their business and their estate planning to make sure Uncle Sam isn't getting his grimy hands on all that. So
I think what's really interesting, and this was an aha moment for me quite a while ago, but most business owners don't realize when they exit, however they exit, right? Let's just talk about an exit. All the benefits they had of owning that business that helped them keep their tax implications down now changes because they no longer have that. And that's one thing that most business owners don't realize. And then the second piece is, you just talked about it. The incentives are given. Most people struggle with taking advantage of tax incentives, whether it's tax credit, tax mitigation, whatever it is. They're fearful. There's a fear out there. And yet those tax incentives are in the code for people to, in this case, for business owners to build their business. And so what the IRS and the government giveth, they taketh, and they want it at the end. And you just touched on that. And I think that's such a big piece. Plus, honestly, I mean, I don't think there's anybody who is living, breathing, that has any sense of reality that our taxes are going to go up or down in the future. I mean, the fact is they're going to go up. I mean, I bet everything I have that they continue to go up because of all the things going on. So
yeah, Pat, that's so important. Most people do not realize how impactful taxes are and tax
yes,
mitigation is. Like you say, a lot of times people are maybe a little bit nervous about it because it's just a world they're not familiar with. In fact, frankly, one of the questions we like to ask everyone is, when was the last time your CPA came to you
yeah,
with a strategy to help you lower your taxes? It's interesting that CPAs are great. Don't get me wrong. We need them. They're very, very important. But oftentimes they're very
compliant.
they're
It's
not
a
very
compliance.
proactive. They
Yeah,
kind of tell you what has happened,
right.
but they don't really look forward to, hey, how can we reposition things to save you money on taxes? And the reality is, there are lots of good people that are, and lots of great CPAs that are very good at that, but they're not well known. And so, one of the things that we pride ourselves on is having that network of experts. I know a lot about taxes. At the same time, I'm not a tax attorney and I'm not a CPA. I'm not going to do your taxes for you. I know who to take you to though, and I know who to bring to you and your CPA so that you guys can make sure that you are getting the most uh, at the end of the day in your pocket. And when somebody sells a business, I can't tell you how many times they work to build this business up and get this great sale, and then they end up giving a huge amount away just because they didn't know any better. They just didn't know
Right.
any better. The tax code, like you mentioned, is there. A lot of people think, oh, people that don't pay taxes they're just, they found a loophole or they're tax cheats or something like that. Well, I guess there's some of those out there for sure, and they will end up finding themselves behind bars at some point. But the reality is, the tax code tells you what you can and can't do. It encourages you to do certain activities if you want to save money on your taxes. And so, if you're just familiar with some of those activities, you can safeguard a lot of what you built
Right.
and let that go to the things that you are interested in, the people in your lives, the charities in your lives that are important to you. And it's just a matter of, like, you can't know everything about everything, and so you bring in the right team members to coordinate, and that's what it's all about. And then, there's just better overall returns for everyone when you do that.
Kirk, I think it's so true. And like you, obviously, one of the things that, the world that we play in is tax mitigation and tax planning. And I was on a call yesterday with two amazing tax attorneys, and it was about for an hour, and I was blown away based upon their knowledge base. And the reason that that call was important for me is that I don't need to be the expert, the tax attorney. I'm not a CPA. I've got a pretty extensive background in finance and accounting. I don't need to be that person. What I need to do is understand and have a knowledge base, and then have a group of people like you and like some of the other business and service providers that we partner with that can all have a common conversation. What's the common goal? The common goal is to help people build wealth, certainly through the ownership of their businesses. And there's a number of different strategies that they can take advantage of. And we're not here to force the strategy down their throat. We're here to say, here's the strategy. Here's how you execute that strategy through the experts, and put yourself in a position to, and I say this to defend it if that conversation would come up at some point, because I think that's the biggest fear people have, is if they take advantage of tax strategies or tax mitigation type of strategies, oh my gosh, what's going to happen if I get questioned? Well, the fact of the matter is you can get questioned on anything you submit to the government, and you should always be prepared to defend it. And so in this case, you work with experts who, that's their daily world, that's their daily life. So I'm so glad that you brought that up. So as we're kind of we come to the end of our conversation here, Kirk, I have this what we call the 2-minute drill. And so I'm going to shout out, if you may, I'm going to shout out a question or a statement, and I just want your quick response to it. Just like running a 2-minute drill. Obviously, we're coming up to the Super Bowl at some point, and so let me ask you this: is this strategy market investing?
No,
And does this eliminate risk?
absolutely.
Does it eliminate the fear of running out of money?
Let me say, it doesn't. There's no way to eliminate all risk. It
Right.
lowers risk drastically.
You're
Yeah.
minimizing it, right?
Does it eliminate the fear of running out of money? Yeah, oh yeah, yeah.
We already know this. I know our outcome's guaranteed.
Um, some outcomes are guaranteed, but most are not. Yeah, we don't know what's going to happen in the future, but we do have about 96 years worth of data that tell us basically how it's worked in the past, which gives us a good forward-looking view.
And you mentioned, certainly that it's not all eggs in one basket. What's the biggest
Yeah.
mistake people make?
Um, Probably not getting started sooner. The power of time and compounding is such a tremendous force. It's like planting a tree, right? The best time to
Right.
do it was 30 years ago. Next best time's today.
Okay, so that brings me to a question that I didn't have written down, but you bring it up. 55 years old. Should I start now?
100%.
60. Should I start?
Oh, yeah.
What about if I'm 25?
Oh, absolutely. Yeah. 25. Oh, my gosh. We could show you what that's going to look like over the years. Here's another thing that I think people don't realize. They always look at, I think one of the big paradigm shifts that needs to be made is quit thinking about retirement as I've got to be old and hanging up my cleats to do that.
Right.
Start thinking about, hey, how can I get my money working for me today so that I can change my lifestyle today? If I'm 23 years old and I can build a machine at a fraction of the cost to pay for my mortgage, I'm mortgage free. Even though there might be a mortgage, if I built the income machine to do that at a fraction of the cost, how does that change my lifestyle, my peace
There
of
you go.
mind? I don't have to be, 65 or 70 years old to be financially free. And so if I can work on building and kind of improving just one little piece of my financial world at a time, those are easier goals. It's not like, oh man, I'm going to be so old. That's so far from now. I don't have to think about it now. And it's like, no, how do we build just something now that you can enjoy now and later?
I wish I was back in my 20s knowing what I know now. Oh my goodness gracious. And I wish that schools would incorporate more of these conversations into the younger generation so they looked at money in a different way, because
Yeah.
we certainly didn't have this type of knowledge or this type of information. One word that matters most in retirement planning.
Um, One word, huh?
Well, you can maybe have two words or three.
Um, Time, time in the market.
How about
Um,
diversification?
yes, diversification is a great one.
How about
Action,
leverage?
actually doing something. Leverage, as long as it's coupled with very careful,
Right,
appropriate leverage.
right.
Otherwise, that's going to hurt you.
Absolutely. So,
Um,
Kirk, what
yeah.
haven't you shared with us that you want to before we sign off?
Oh man, there's so much I could share. I could talk your ear off for days at a time.
I know.
Um, I would say, like anything else, probably, just find out more. Dig into it.
Right.
It is extremely compelling. I promise you, you will not be disappointed. You're going to learn some stuff you had no idea. We have people that have been in the industry for 30, 40 years that when they first talk to us, they're like, I've heard everything and I've seen everything. There's nothing you can show me, Kirk, that's going to be different than what I've seen a million times. And by the end of the conversation, they're like, oh my gosh, where have you
Yeah.
been the last 30, 40 years? So, yeah, you won't be disappointed.
I love it. I love it. Well, Kirk, first of all, thank you so much for all the information you shared today. And so here's my real takeaway is that retirement isn't about dying with the most money. It's about living without fear. The flex method isn't magic. It's not perfect, and it may not be for everyone. But here's what I do know. I do know that it's right for business owners. It offers something most strategies don't. Control, flexibility, and a wealth building vehicle that takes advantage of the compound effect and minimizes risk. Confidence that one bad market or one bad decision won't derail decades of work. So, Kirk, I appreciate the conversation. And is there a way for people to reach out to you and get in touch with you if they had more questions?
Well, for the Flex Method, I would say go to theflexmethod.com and there'll be some contact information there that we've got. There's some good information there. Obviously, just talk to somebody. That's the best way to understand more about it. You don't have to read through the encyclopedia in order to figure out how this works. Just talk to us and we'll tell you how it works. So,
Absolutely. Absolutely. Well, in Kirk, again, we appreciate the conversation, and everyone listening. If the fear of running out of money keeps you up at night, the solution isn't guessing harder. It's planning smarter. If you want additional information on the Flex Method or any of the services that we provide, you can go to www.mancusocg.com. We have a number of free resources, and we're always there to help people understand more information so they can make better decisions. Kirk, thanks so much for being here today. We appreciate it.
Thank you, Pat.
Take care.
If you're serious about building a more profitable business, make sure you subscribe to the Owner's Profit Playbook so you never miss an episode. And if you know another business owner who could benefit from this conversation, share it with them. To learn more about how we help business owners uncover hidden opportunities and strengthen their financial strategy, visit mancusocg.com. And remember, what you don't know is costing you commas and zeros.